Taxes. We all just love paying those, don't we? We work so hard all year long, only to end up giving away a third to a half of everything we earn to the government. And that's in addition to the fact that we pay taxes on everything we buy, the home we live in, everything, right? So I'm going to share my personal story of how my husband and I used taxes, or lack thereof, to completely change our lives, really, honestly. I left my career of 26 years and went into doing what I had always wanted to be doing. Although I love my career, I'm not saying that. I was a wildlife biologist. I was out there saving endangered species. I was doing prescribed burning and restoration conservation work. But at some point, after 26 years of that, I'm 50 now, by the way. I'll just throw that out there. It's okay. I just decided it was now time to hang that up, give it to the new generation. At some point, hanging out of helicopters, climbing trees, and working chainsaws, it's a young person's game, right? But I had always wanted to venture into the real estate side, which I know sounds very different than the wildlife ecology side, and it is, but there's a really good reason for me wanting to do this. So I had always wanted to do more of that because it builds that long-term generational wealth. And I have a special needs son. So that was very important to me that I could build something that would carry on beyond my lifetime and make sure it took care of him as well as my other son. And I didn't want my other son to have the economic burden of maybe taking care of my oldest son. So I had always wanted to do that. I'd been doing real estate on the side, but I couldn't find a way to transition from the career I had, which had that constant paycheck coming in every month, to that life. But here's how it all worked out. So I'm going to share this with you. I haven't shared this with a lot of people, but I'm sharing it with you. My husband and I also own two Massage Envy franchise locations. So if you're not familiar with Massage Envy, it is basically works as a membership model, much like a gym, where your members they pay a certain monthly rate and then they get a free massage or facial included with that membership every month. And then they can get additional services at a much lower price than anybody else who walks in through the door who doesn't have a membership. And it's a fairly profitable operation. And all you entrepreneurs know out there that it's great to make money, but then, oh, those taxes hit and it hurts. Like they take so much of your hard earned money. So in this case, my husband was running most of those. I was doing my full time job. I had a master's degree. I worked really hard to get to do what I was doing, but I'm working for the state. The state does not pay tremendous amounts of money, so I'm not rolling in the dough there. We are making more money on the massage envy side, but I really wanted to find a way to transition into real estate and really start to grow that because while I'm working full time, I had limited time. So all I was doing was picking up a couple of short term or single family homes rather for either short term rentals or full time rentals. So I wanted to scale that. I wanted to scale to multifamily. So we went to a mastermind event and I ran into a tax strategist that started talking to me about the depreciation that you can get when you invest in large real estate like apartment complexes, retail shopping centers, medical complexes, the big stuff. There's tremendous amount of depreciation that comes through for that. And whether you are an active investor, like the main person buying that or on the main team that's doing that, or if you are a passive investor in these, you are a true owner of that. So you get the depreciation on these big pieces of real estate. And the cool part is the bank is really putting up most of the money to buy these. Banks love real estate. They know it's a fairly safe asset to invest in. So they love lending on it. So usually they'll bring anywhere from 60 to 80% of the purchase price. And then the investor or investors bring the other 20 to 40%, right? As the down payment, closing costs, all that kind of stuff. But you get depreciation on the full value of that asset. So depreciation really in real estate is just a write-off. It's just a huge tax write-off. So we started looking at how much money, excess money, Massage Envy brings in and what we could pull out of that each quarter and invest into these larger real estate deals. And so we had been doing this, but mainly like putting the money in savings accounts and buying single family homes, or we were buying stocks. Well, stocks come with no leverage because no one's going to give you a loan to go buy stocks. And they come with no depreciation, no big tax benefits. As a matter of fact, every time you have a winning stock and you cash it out, you get taxed. So I want something that could write off the income that we make off those investments, i.e., real estate will do that, and to give us additional write offs, right? So then I talked to my accountant. I said, okay, so if we invest in these, how much tax savings is there? And he told me the amount, and it was kind of earth shattering. I'm like, oh my gosh, that's like as much as I make. We would be saving as much in taxes as I make in my income. So I said, so I'm essentially working for free. All I have to do is invest in these, and then I don't have to work anymore. And he says, that's true, with one caveat. And I said, what's that? And he says, well, the IRS has different income buckets. And what you have right now is a job, and your husband is getting income in two ways, both as a W-2 employee of his own business, as well as dividend distributions from that business. And he says passive income, which is what you'd be getting in real estate, is a different bucket. So you can only write off the losses that you get from that depreciation off that type of income. So the income you make from that real estate, you can use depreciation to offset that, to write that off, but you cannot use it to offset your husband's income. I was like, oh, bummer. I thought I had solved it here. He goes, unless of course you were a real estate professional. I was like, wait, that's kind of what I had wanted to do. I wanted to leave my job and start doing real estate full time. He says, great. If you do that, then everything becomes active income, and you can use that depreciation to offset any income that I make, as well as my husband, since we're filing jointly. So he said those are the keys. You have to be a real estate professional, and you have to and you have to be married filing jointly if you're gonna do this. So a single person can do this as a real estate investor, of course, or if you're joint married filing together, if one can qualify as a real estate professional. Now, there are a lot of different things that go into qualifying for that. You can't, for example, be a real estate agent unless you own the agency. So obviously, real estate agent is a professional in the real estate world, so it's sort of deceiving, but there's very specific definitions to this. But basically, you have to actually own the real estate business or the real estate properties and have active involvement in that. So you can look up all of that. But if you have a spouse who is into real estate or wants to be into real estate and wants to do that full time, and you have a big tax burden from a business that you own or from some other source, you're just, maybe one of you is just a really high paid professional, this is a hack that could save you tremendous amounts of money if you qualify for this. And this all came about just from a casual conversation with a tax strategist. Like, getting in the rooms with the right people who know this stuff is just phenomenal. I can't tell you how many golden nuggets like that I find every time I go to an event and talk to people like this, whether it's key business strategies or tax savings or whatever. But sure enough, we went ahead and did this. So I left my job, so gave up that steady income that I was used to, and went full into this, and it didn't affect our money because the real estate saved us the full amount of my income in taxes. And then in addition to that, I took the retirement account that I had from that 26-year career, right? There was a really nice retirement package that came with that. And I put that into a self-directed retirement account. And this is another hack that I didn't know about until someone at one of these masterminds told me about it. And they said, did you know you can self-direct your retirement account and use that to invest in real estate? I was like, what? I thought I could only pick from a few choices of stocks or mutual funds, and they're like, yep, while it's with your employer, the company that they choose to do their retirement accounts with, they will make those decisions. But if you leave it, you own that account now, you can do what you want with it. And if you wish to roll it over to a self-directed account, you can do that. And if that's a Roth account, you will never have to pay taxes on any of the money it generates. And she said, once you are investing in real estate, if you're doing it right, you should be able to double that money every 4 to 6 years, which also blew my mind because I was used to earning maybe, 6 to 8% on from stocks, and then also paying taxes on that. And this is after tax kind of money. I was like, whoa, this is blowing my mind. Okay, doubling my money every 4 to 6 years. She goes, yep, you can just keep doing that and not pay taxes on that if it's in a Roth. And I already had part of my retirement account in a Roth, part of it in traditional. So she also told me how I can start rolling over the traditional into Roth, which does generate a taxable event, right? But she said how to figure out when I was going to have enough depreciation to write that off. So that's a whole other thing. We're not going to get into that. But the point is that there are so many ways to save money on taxes. If you're not consulting professionals about this, then you could be leaving a lot of money on the table. Whether you choose to go into real estate, have a spouse that does that, or go a completely different avenue, or want to use your retirement accounts, there's so many things out there that your typical CPA isn't going to know. So I always thought if I needed tax advice that I should talk to my CPA. Turns out CPAs and tax strategists are two very different people. And there are different tax strategists for different types of jobs and careers, but there's lots of them that specialize in working with small businesses and large businesses, basically business owners in general. There's a reason the really big players out there like Jeff Bezos and Elon Musk and um, Warren Buffett, they don't pay taxes. And a lot of it is they put a lot of money in real estate, get a lot of depreciation, write it off. There's also a lot of other things. There's things in oil and gas you can do. Not something I'm a favor of since I'm kind of into the environment. But there are just lots of avenues where you could be saving taxes. So if you're not taking advantage of these things, make sure you do. And I'm happy to help with anything I can. I'm not a CPA. I'm not a tax strategist. I'm not selling any kind of coaching on this kind of stuff. I'm just someone who's been through it. We have great businesses. They do well. We take that income, we put it into real estate. So if ever the businesses go down, we have the real estate income. That real estate is not extra work for us. It's passive, right? So we have property managers that take care of all of that. We have investments now in 8 different states in various real estate, plus a hotel in Puerto Rico. You can do a lot of this stuff passively. I just had my mind open to so much stuff. So if I can help you with any of that, I'm all about bringing value to people. So please reach out if I can do that, or if I can just connect you with someone who can do that. So hopefully you found some value in this video. Hopefully it opened your eyes to some of the possibilities out there. Maybe I saved you a ton of money. We saved like 150 grand for 3 years straight. We didn't pay any taxes. Legal. It's completely legal. So anyway, I hope that you found some value in this information. And if you did, and if you'd like more valuable information on tax savings, on scaling your business, on developing passive income, maybe about freeing up more of your time so you can spend it with your friends and with your family, as well as ways to fit exercise and healthy eating, particularly, into your busy schedule. We're actually going to be doing an event that talks about all of this. So join us October 25th and 26th at the BIZNINJA Bootcamp in Arizona. It's going to be a wild time. We have rented out the largest American Ninja Warrior gym in Arizona, and we are hosting a combination mastermind and athletic competition there. No worries, you don't have to be an Olympic athlete to attend this. It is suitable for all fitness levels. It's just a fun way to network and learn together. So not sitting in a conference room just being bored, right? So please join us so we can get your business and your life off to a great start in 2025. And if you've registered this week, you can save $200 off registration. And speaking of taxes, this is, of course, a business write-off, and you can consider it a mini vacation because we're also staying at the gorgeous Arizona Grand Resort and Spa at a phenomenally low group rate. What's more, we are throwing in 4 tickets to the Oasis Water Park for everyone reserving their room on the same day as they get their tickets. I can't tell you how much value I get out of attending mastermind events like this. It's really something you have to experience for yourself to truly understand. I have found countless business partners, investors, coaches, amazing advisors at network events like this. It is true what they say. Your net worth is equal to your network. So get in the rooms, or in this case, get in the gym. So hit the link and take advantage of the $200 savings. I am looking forward to seeing you there in person. Take care.